$9 trillion of QE didn't do any good. I mean, how does the Fed do QE? They buy bonds from banks, give the money to the banks, and the banks give it back to the Fed as excess reserves. What does that do for the economy? Nothing. Zero rates, again, it doesn't work. They don't have the tools.
Hello, and welcome to Crypto IQ. In this video, investment banker and New York Times best-selling author Jim Rickards breaks down the current state of the world economy and how he is protecting his wealth during the bear market.
Cash is extremely valuable. Number one, it performs very well in disinflation and deflation. Deflation, it could be even with a very low nominal yield, it can have a much higher real yield in a world where prices are going down. So it's a good deflation hedge. But more importantly, cash gives you optionality. If taking everything we just described about a potential stock market crash that could be 30% or more, a global liquidity crisis that could be worse than 2008. I mean, there are plenty of signs of both of those things. Well, if you're the one with cash, first of all, you're not going to lose money on cash. You will on stocks and other asset classes, but not cash. And then when this drawdown comes, when this collapse comes, you're the one who can go shopping. You can go out in the wreckage and say, oh, well, here's a good company. It's down 90%. I'll buy some of that. By the way, the person with the most cash in the world is Warren Buffett. Berkshire Hathaway has over $130 billion of cash. Now, why do they have that? The answer is Buffett sees the same thing I see, the same thing we're talking about right now, which is in a highly uncertain world with a lot of vulnerabilities. That's exactly what we're describing that come home to roost, and that's how I see 2023. Cash will preserve wealth and then give you the opportunity to pick up bargains. I'd also have a slice of gold. I recommend 10%. People always want to put words in your mouth. Jim Rickards says, sell everything and buy gold. I've never said that. I don't think it's a good strategy. 10%, yes. Now, if you have 10%, sit tight. It'll serve you well. If you don't, you might want to get some gold because a lot of what we're talking about is going to play out in foreign exchange markets.
I want to just bring up crypto here. Since we've spoken about it in the past, obviously a horrific year for the sector. Do you think that Bitcoin will still be around, Jim?
Eventually, no. It'll be around for a while, and it might, outperform some of the other cryptos. But I'm struck by the fact that I go back to the Gertrude-Stein theory. There's no there. And what's interesting about the last 5 years, and by the way, I say things like this, Danielle, and people go, oh, Jim Rickards, he's a dinosaur. He doesn't understand technology. It's a nonsense. I read, Satoshi Nakamoto's paper within months of its coming out. I've been in, gold, Bitcoin debates since 2010. I actually know a lot about it, which kind of brings me to my point, which is with nothing in the center, they replicated the entire structure of Wall Street. So you have exchanges, custodians, futures, options, settlement, clearance, lending, yields, etc. This whole Wall Street infrastructure, financial infrastructure, around nothing. I mean, Tesla stock, for example, maybe you like Tesla, maybe you don't. That's an individual choice. But at least they make cars. There's a real car there. And even intangibles, insurance companies provide services. There's something there. In crypto, there's nothing there, but they've replicated this infrastructure. And so a lot of the wealth that's been generated in crypto is because you own a crypto exchange or you own a lender set. Now, that's all imploding. It's kind of a replay of 2008, except instead of, Bear Stearns, Lehman Brothers, Fannie Mae, Freddie Mac, and, Morgan Stanley was hanging by a thread. It's, FTX most prominently, but Genesis is kind of considering bankruptcy, et cetera. So all that is collapsing. So Bitcoin's not an exchange. It's not part of that infrastructure. It's just a coin. The best analogy I've been able to come up with, Danielle, I mean, I have a lot more to say about it coming out of communications theory, but it's like a casino chip. If I walk into a casino and put my money on the roulette table and the croupier gives me chips, I can gamble them, I can play with them, I can make money or lose money, but when I leave, I go to the cashier and get my dollars back and walk out. If I take the chips outside the casino, they're worthless. I can't pay for dinner with casino chips. So cryptocurrencies are casino chips. You're in the crypto casino. Some people made a lot of money, and I know some of them personally. A lot of people have lost a lot of money. More have lost than made money, which is how casinos work, by the way. So eventually they'll all go to zero, but in stages. But what's collapsing right now is the infrastructure. So here's the Fed trying to deal with inflation, but they're dealing with it from the supply side. The Fed doesn't drill for oil. They don't drive trucks. They don't grow crops. They don't have farms, etc. The Fed can't do anything about supply side inflation except destroy demand. But here's the question: how much demand do you have to destroy to control inflation coming from the supply side? The answer is a lot. They're trying to get to a terminal rate. They're already there. They just don't know it. They'll be the last to know. So they're going to take rates to 5.25 or higher by March. But they're already at the terminal rate. They just don't know it. And so inflation is already coming down. And this is the thing that the markets and investors are not ready for. Inflation is going to come down fast. There's even some danger of deflation and a major U.S. recession in 2023. And no one's ready for that. I mean, people talk about recession, but it's going to be worse than they think.
So do you agree with Jim that crypto is like a casino? How are you protecting your wealth during these hard economic times? Let us know in the comments. Thanks for watching, and we'll see you soon in the next video.